Hello, good morning everyone, and welcome to today's morning report with me, Richard Perry, markets analyst at Hantech Markets for Wednesday the 30th of April. We had a fairly positive close on Wall Street, but that wasn't really shown through in the Asian trading session. There was a bit of a mixed bag there from the Asian markets, probably not helped by the Bank of Japan keeping monetary policy on hold, which strengthened the yen overnight and certainly held back any sort of recovery that we could have expected from the Nikkei following on from its public holiday being closed yesterday. But there was certainly, you would say, on the VIX volatility, the VIX falling there yesterday, so it suggests that a little bit of decline of volatility, which is generally seen as positive for equities, and we saw a decent close on Wall Street as well. So European markets are fairly mixed again, following on from the Asian markets, which were mixed. European markets fairly flat. FTSE's very slightly higher. The DAX is very slightly lower. Also, the CAC slightly lower as well. So, not a huge amount to go on there. There's a significant amount of data that we can point out to for suggesting that there's going to be a fair amount of caution today in front of the data. So, just be careful of that. In terms of the Forex markets, the dollar has actually strengthened a little bit from yesterday. There was gains yesterday following on from the jump in the dollar on the back of the weaker than expected UK growth figures, which saw a bit of a slight decline on cable, and then the weak inflation figure for Germany pulled euro dollar low as well. So dollar has recovered some of its lost ground on the dollar index, and it continues to slightly tick up today. But as I said, there's a huge amount of data that we need to be watching out for. The first one comes up with the Eurozone CPI at 10 o'clock. That is forecast to come in at 0.8%, or certainly was forecast to come in at 0.8% just before the German inflation data disappointed. That disappointment in the German inflation data actually created the cause for banks such as RBS and Barclays to cut their estimates for Eurozone inflation today to around about 0.7%. And it could suggest that we might have a little bit of a miss on the downside. Euro got put under pressure, under a bit of selling pressure yesterday after that German inflation data, and certainly if Eurozone inflation comes in a little bit light, then maybe the euro could have a bit of pressure again to the downside. That's out at 10 o'clock this morning. Then we move on to the ADP employment report for the private payrolls. This is sometimes gives us a bit of an indication as to non-farm payrolls. Last month it did a very good job. 191 for the ADP report, 192 for the non-farm payrolls, so it was a pretty decent gauge. This month it's expected to come in at 210,000, with non-farm payrolls on Friday at the moment expected to be 205,000. So again, the two are fairly similar if that is the forecasts are to be believed. Then we move on to at 1:30. We've got growth numbers for the Canada. That's expected to come in at 2.5% year on year, 0.2% month on month for February. And also the US GDP as well, expected to come in at 1.2% annualised. That's slightly impacted by the weather that in the first quarter, so that's the reason for the decline, but we'll wait and see how that one pans out. But then finally we end the day with the FOMC. That comes and gives its decision for its two-day meeting at 7 o'clock this evening. No real expectation of any surprises there. Further tapering of asset purchases to $45 billion for the month is the expectation, and there's no press conference today, so there's no opportunity for nitpicking at anything Janet Yellen says. So it could be quite perhaps a fairly dull event this evening, but we wait and see for that this afternoon. So there's a lot going on that can certainly move the key currency markets, and also stock markets as well appear to be fairly cautious in front of the data today. My chart of the day is the euro sterling, and that is basically I'm doing that because we've had a sharp a sharp outside day, bearish outside day, which happened yesterday, where they had a move up towards the high in the morning, and then sharp reversal, and that came on the back of that German inflation data. And certainly on the daily chart, you would say that this line around 82.40 seems to be the resistance now. Every time it comes up towards there, it seems to back away again. So that appears to be the line of resistance. It was former support of a trading range, which I'll show you in a minute. Now it becomes resistance. These momentum indicators are all in bearish configuration. The RSI continues to fall over under 50. And the MACD lines are negative, and also the stochastics as well. Stochastics have just rolled over again, so it suggests pressure will be seen on that support at 81.93, and then ultimately at 81.54 as well. On the intraday chart, we'll see that that range support in more detail that has become resistance. And these moving averages are all turning lower in bearish sequence as well. These momentum indicators are all weak, suggesting that I think any sort of rally would be a chance to sell into. I think you'd probably be looking at, I've zoomed in a little bit too close there. I'd be looking at 82.20 sort of area, I think, as a fairly decent old support throughout the last few days. Has now become resistance overnight. So I think 82.20 would be a decent area to sell. However, you would certainly argue that the announcement of the inflation data at 10 o'clock today could have a significant impact on this chart, but certainly the technicals are suggesting that there's going to be downside pressure on these 81.93 support, and ultimately back towards the 81.50 area in due course. So that's my outlook on Euro Sterling, and I wish you good luck in your trading. Obviously be careful around about 10 o'clock today with the inflation data. Okay, good luck, and I will speak to you later. Thank you.